If you've ever felt like you're working hard, earning decent money, maybe even saving a little, but still not getting ahead, this is for you. Because most people don't have a money problem. They have a system problem. They're earning without a strategy, saving without a plan, investing without understanding. And today, I'm going to walk you through a complete 5-step wealth system you can follow for the next 30 years. Not a hack, not a trend, not a get-rich-quick plan. A system. Step 1. Build financial stability first. Before investing, before side hustles, before crypto, you need stability. That means 2 things. 1. Control your cash flow. 2. Build an emergency fund. Cash flow is simple. If you earn $4,000 a month and spend $3,900, you don't have a wealth building gap. You have a survival gap. Wealth is built from the gap between what you earn and what you spend. Even $300, $500 per month consistently invested over decades can change your life. Now let's talk emergency funds. 3 to 6 months of essential expenses in cash. Why? Because life will happen. Your car will break. Your hours will get cut. Unexpected medical bills will show up. Without an emergency fund, every surprise becomes debt. And debt destroys momentum. This is your financial shock absorber. Step 2. Eliminate high-interest debt. Not all debt is equal. A 3% mortgage is not the same as a 22% credit card. If you're carrying high-interest debt, that is your priority. Because paying off a 20% credit card is like earning a guaranteed 20% return. That's better than what the S&P 500 has averaged historically. Guaranteed returns beat uncertain ones. So here's your rule. If interest is above 8 to 10%, attack it aggressively. Cut expenses temporarily. Increase income temporarily. Focus intensely. Once that weight is gone, your cash flow opens up. And that's when things get powerful. Step 3. Start investing early, even small amounts. Here's where most people delay too long. They think, I'll invest when I earn more. I'll invest when things settle down. I'll invest when I feel ready. But time matters more than amount. Let's break it down. If you invest $500 a month for 30 years at 8%, that could grow into well over $500,000. Not because you're brilliant, because of compounding. The earlier you start, the more your money earns on top of its own earnings. That's why broad index investing works so well. Instead of picking individual stocks, many investors use low-cost funds that track large markets like the S&P 500. This spreads risk across hundreds of companies. You don't need to predict winners. You just need consistency. Automate it. Monthly. No emotion. Step 4. Increase income intentionally. This is the part that changes everything. Most financial advice focuses on cutting coffee, but wealth accelerates when income rises. Ask yourself, can I negotiate my salary? Can I build a skill that increases my earning power? Can I create a side income stream? A $10,000 raise invested annually over 20 years is life-changing. And here's the mindset shift. Your job funds your investments. Your investments fund your freedom. One supports the other. Step 5. Stay invested through market fear. This is where most wealth is either built or destroyed. Markets don't go up in straight lines. They crash. They recover. They hit new highs. Historically, the S&P 500 has experienced multiple major crashes and still delivered long-term growth. The investors who win aren't the smartest. They are the calmest. Panic selling locks in losses. Long-term investors understand volatility is normal. If you don't need the money for 10+ years, short-term drops are noise. The mistake isn't investing. The mistake is investing without emotional preparation. The order that actually works. Here's the full system clearly. 1. Stabilize cash flow. 2. Build emergency fund. 3. Eliminate high-interest debt. 4. Invest consistently in diversified assets. 5. Increase income and repeat. Simple. Not easy, but simple. The psychological layer. Money isn't just math. It's behavior. If debt stresses you out, pay it off first. If you can handle volatility and your debt is low interest, invest alongside it. The perfect strategy is the one you stick to for 20 years. Because wealth is built slowly, quietly, almost boringly. Then one day, it looks dramatic. The 10-year reality check. Let me give you perspective. If you invest consistently for 10 years, you might feel like progress is slow. But around year 15 to 20, something changes. Your returns start becoming larger than your contributions. Your money starts working harder than you do. That's the tipping point. Most people quit before that. Don't. Final thought. There is no single perfect answer to invest or pay off debt. There is only the correct order for your life stage. But if you follow this 5-step system consistently for the next 20 to 30 years, you won't need financial luck. You'll have financial structure. And structure beats motivation every time. If this helped you think long-term, share it with someone who needs clarity. Because the biggest financial advantage isn't intelligence. It's starting early and not stopping.